Hi, this is P R Sundar. Welcome to this special episode where I am going to talk about VIX Curve Inversion. So, what is VIX Curve Inversion? So, let me explain. The stock market is all about fear and greed, and the people buy the shares expecting the price to go up. So, that's a greed. And when the price falls, so they are afraid the markets may fall even further. So, they sell the shares even at a loss, and that is fear. So, the fear and greed is the stock market. But some smart people like Warren Buffett, so what they say you buy when others are selling and you sell when others are buying. Or they say you buy when people are fear and you sell when the people are in greedy. Point here is that how to know the people are in fear or not. There are certain indicators, and few days before I just reposted what one person has posted in US. So they have some indicators: fear, extreme fear, greed, extreme greed, and so on. So that is one factor you can look at it. And I think in money control also there is some place. I am not very sure. People in channels and business channels and everywhere, they will be talking about the extreme fear. So if you are a contra investor, a long-term investors, buy when the markets are in absolute panic. And you may remember people who bought the shares during coronavirus, people who bought the shares during Lehman Brothers collapse. So they were uniformly rewarded few years later. Even for trading perspective also, one needs to know when the market is in fear and when the market is in greed. One way people look at, mostly traders, look at an indicator for fear and greed is India VIX. So India VIX, VIX stands for volatility index. The higher the volatility index, generally higher the fear. In fact, there is another name for this volatility index, that is called fear index. So as the volatility index goes higher and higher, so that means the fear is higher. Now, when the people are in fear, you want to buy. But then the fear can become even more fear. Even more fear can become even more fear. Say for example, if you are looking at the India VIX, normally what happens, India VIX trades between somewhere around 15 to 30, that is considered as a moderate VIX. So any VIX below 15 is considered to be, lower VIX. And then anything above 30 is considered to be higher VIX. So let us say one day VIX has come to 30, 31, and that means the markets are in fear. So the people say, no, you should buy the fear and sell the greed. So if you have bought when the VIX was at 31 or 32 during 2008 and 2020, then what happened? The VIX went up to 85, 86. And then people who have bought when the VIX was 31, so they lost heavily. It is necessary to know which fear you are supposed to buy or which greed you have to sell. So therefore, the VIX is not the correct indication, whether the markets are in a fear or short-term fear or not. But what people do in US, they look for an indicator called VIX Curve Inversion. In US markets, it's a more matured market. There, even the US VIX is traded in futures. Just like here, Nifty is an average of 50 stocks. But you cannot trade Nifty. Nifty is just a number. But there is something called Nifty future, which will be more or less same as the Nifty 50, and you can trade in Nifty future. But usually the Nifty future will be about 50 to 100 point premium to Nifty. That's because markets are expected to go higher in future, so that's a future price. But what happens sometimes if Nifty future is trading at a discount to the spot? So what does it mean? in future the prices has to be higher. But now the future price is lower than the current price. So that means market is extremely bear. So one indication for Indian markets, if you want to know when the markets are in extreme fear, that is when the Nifty future is trading at a discount to the Nifty spot. And many times in the past, when the markets were falling, when the Nifty future came to discount to the Nifty, so that is when the markets bottomed out. So I'm talking about Indian context. The same way in US, volatility index. The volatility index is just a number, is calculated based on the movement of the option prices. That is a number. Just like Nifty 50 is a number, US VIX is a number. Just like Nifty 50 future is trading in India, the same way US VIX future is also trading in US. In fact, few years before, NSE wanted to introduce, they actually introduced India VIX futures. But then there was hardly any liquidity. Nobody was trading. So, but in US, the VIX futures are traded very, very actively because the markets there, tend to move very violently. VIX futures is also a form of hedging for the people who are holding the portfolio. Now, logically, the VIX spot, let us say the VIX spot is 20. So, VIX future should be 21 or 22. Just like Nifty future here is always higher than the Nifty spot. So, there also the VIX future has to be slightly premium over the VIX spot. But what happens sometimes when the markets are in extreme fear? I'm talking about market in extreme fear, the short term fear. Long term, no problem. But in the short term, the fear is very, very high. So, in that case, what happens? The VIX, the spot name VIX will be trading higher than the VIX futures. Or we should put it correctly, trading happens only in VIX futures. And VIX spot is just a calculation. So, the VIX future is trading at a discount to the VIX spot. So, that is called, VIX Curve Inversion. And why I am talking about this? The last week that has actually happened in US. And because, Fed chairman was giving hawkish comment, markets were falling, Europe markets were at a 6 months low by the end of September, again in the month of October started falling, US markets were too volatile, so the fear was extreme, right? And the VIX future 1 month, 2 month, 3 month down the lane is trading at a lower price than the current VIX price. So that indicates that, people are worried about some very, very short term phenomena, maybe for 1 week or 10 days, but 1 month, 2 months down the lane, they are not expecting the markets to be that volatile. So usually markets bottom out. So when this happens in US market, when was the last time this has happened in US market? It happened in the month of March. If you can remember, in the month of March, there were so many mid-sized banks. There's some Silicon Valley Bank, Republic Bank, there are few banks went for bankruptcy and the banking stocks fell like anything. So that is when this has happened, and that time the markets bottomed out and then markets shot up. And now the same thing is happening in US markets now. So this is an extreme fear. Extreme fear, it does not mean that market will have to compulsorily bottom out, but the probability of market bottoming out is high, right? So there is a reason why people are feeling fear. There is a reason for the fear. So that fear can increase also. But if you are a long-term investor, so these are the times you have to look for investing. But again, whatever I am talking, I am talking in the context of the US markets. In Indian markets, just like US, here VIX futures are not trading. So there is no way you will come to know. But however, you have seen in the current month, the beginning of the month, the first trading session, the Nifty future was more than 100 point higher than the spot. In just 2 to 3 trading session, it came to 10 to 15 point premium only. So that premium has contracted so much. But now you see what is the effect? The markets have bottomed out and markets are moving higher. These are like some of the things you have to look, to see whether the short-term market bottom has happened or not. So hope you enjoyed watching this video. Thank you for watching.